Hello everyone, this is Brandon from Galaxydoc Market. Today is May 20th, 2024. It's about 1:35 p.m. Eastern Time as I am recording this for you all. And it's about how to trade Williams-Sonoma, WSM, earnings, which is due to report May 22nd, 2024 pre-market. All right, so let's get going on this. Okay, here's the disclaimer. Pause it and read it. If you agree, please move forward. Now, another shameless plug. I'm trying to grow our X.com channel, and partly because we have so much activity there and so many insightful articles and charts that I like to share and with our not only our members but also to the general public. And we are a good resource here. So if you haven't done so already, please go there and follow us if you want. You don't even need to follow, but if you want to see anything intraday that I am posting, or the things that other people are commenting that I feel like is important, please check us out. Okay. Now, after that shameless plug, let's get moving. So I like Williams-Sonoma to do this video, and our members have already gotten a heads up on this, and they have already received this video, but it will be out in time for you to kind of look at it and make sure you do your own due diligence and see if this makes sense for you. Maybe our analysis makes sense to you, okay? But always do your own due diligence, okay? Always, trust but verify everything. And this is not financial advice. However, I want to give a thorough analysis to see, give you guys a heads up, and maybe you haven't been thinking about Williams-Sonoma as a potential earnings play or a trade after the earnings. Okay. The reason why I like it is because it's a consumer demand destruction thesis trade. And I've been talking about that ad nauseum. If you haven't seen it, go and watch my part 1, 2, 3, and 4 videos. And they are getting increasingly longer and longer, partly because there's so much information that I need to disseminate. And also the weekend video previous to that. Okay, I talk about that as well. I talk about that significantly on X.com channel. Okay. And this whole consumer demand destruction thesis is that the stagflation, where the wages aren't growing, people are losing their jobs, and it's not keeping up with inflation. So people are beginning to max out their credit cards, and they're living paycheck to paycheck, and they are not able to buy discretionary items. And Williams Sonoma is dependent on not only wealthy clients, but people. It is, their clientele is middle class, where they aspire to be wealthy by buying these very ultra luxurious pots and pans and kitchen items. And this is the American dream. The problem right now is because of the continuous inflationary pressures and the continuous job losses and continuous distortions in the market, we are beginning to see people unable to afford these. And that is why I'm choosing WSM, but also because it has a very compelling technical setup on the charts, in which we will all go over. Okay. So we know that Williams-Sonoma reports earnings on May 22nd, 2024, pre-market, which is Wednesday, folks. Okay. So by the time you get this on Tuesday, you'll still have time to watch it and then make your own decision. I may release this maybe after hours today if I have the time. But as I'm recording it, just remember that this will go out before the earnings. Now, I do like to go over this. It's something that I like to do and kind of compare about what's going on. How has Williams-Sonoma been in terms of their earnings? And they've been pretty good. I mean, they have actually been very good about beating earnings, right? Consensus estimates. Okay. And the analysts keep raising their estimates from the prior quarters, right? And you can see the sequential from last Q1, which is May 23rd, which we're going to look at, from $2.41 and to last Q4 earnings, I went to 506, and the estimate is even higher for the May 22nd. It's about in the $6 range, I believe. And they've beaten those EPS estimates, okay, handedly by significant margin, and they've been rewarded. Except the May 23rd, which is the Q1, which is seasonally their weakest quarter after the holiday seasons from November in through uh, November months, right, into the January. Okay, so those holiday months are very, very strong for Williams Sonoma, as you can imagine. So what I want to point out though is that May 23rd is a seasonally weak month. Okay, so they did beat the EPS, but barely. Okay, and last time I'll show you exactly how the stock behaved. But really, if the EPS is good, if you look at it, the revenue estimates, they've been missing those, right? They've been missing those revenue estimates consistently, except for last quarter for the Q4 back in March 13th, 2024. They not only beat EPS, but they also beat the revenues, okay? By a pretty decent margin. And then we're going to go over all of these. Keep this in mind. If the EPS is strong, usually the market will forgive some misses on the revenue end if they miss those analyst estimates. But it's really what's dependent on the stock moving is kind of the outlook as well as, their guidance. And a lot of these companies are basically either foregoing guidance or the guidances are becoming weaker and weaker because the consumer base is getting weaker. Despite what the Fed may tell you, the inflation is much, much higher. And we'll go over a lot of the factors to show you how maybe considering after the earnings, I'm looking at a potential short because also the stock is at all-time highs, near all-time highs. It just stalling out at these levels. And I'll kind of show you what we're looking at using our Galaxy method. Now, let's go over the Q4. I said the Q4 generally has been strong, and it's, no secret here. They beat earnings, okay, and revenue. Okay, this is from March, right? March 13th. They reported pre-market, of course, when they report pre-market, it gapped up on that good news. I mean, that was a really spectacular earnings news, and it ran much, much higher, right? And it ran from 262 all the way to 309 in a matter of about a couple of weeks. Now, this is something to keep in mind. Okay, when we go into the next quarter in the Q3, this is the November 15th, 2023. They beat EPS but missed on the revenues, but the street forgave them because guess what? They were anticipating strong holiday quarters. And, even then, even though the demand destruction was happening, people were still charging things up on their credit cards, right? Interest rates be damned. They were basically buying it up on credit. And then this is the reason why now people are tapped out from this holiday season. But they had a strong holiday seasonality. They went from, 160 all the way up to 182, and they kept running and running and running, folks. I mean, this is significant, right? Now, let's go to Q2 earnings, which is basically August 23rd. Again, they beat EPS, but they missed revenues. But it didn't matter because when they report pre-market and they raised guidance and they announced stock repurchases, well, I mean, it jumped up significantly. Not only did it gap up from the 123 level, it just ran up. It was a gap and go all day long into 141. That's, almost 18 points movement. And then it moved even higher. The next day, it went into 144. So from 123 to 124, that's, 21 points a move in a day, a couple of days. Not bad, right? If you're long. And so why am I bearish on Williams Sonoma? Well, it's because right now we're coming into, this is the last 2023's Q1 report. Seasonally, their weakest quarter. Okay, so earnings pre-market was released. They beat EPS, but they missed revenues. Okay, they missed revenue, and the beat on the EPS was marginal, and it was basically done on comps and forward earnings. And so the market basically, remember, they report pre-market, so they closed right about here. And then I think they kind of knew some bad news might be coming pre-market. However, a few couple of days. Okay, we're kind of in this situation, right? We're kind of at the top end of the range, and then maybe it starts to sell off. Who knows? But I mean, past performance is no indication of what's going to happen. What we can do is extrapolate on the behavior of this stock. So they report this earnings. Okay, they open here. All right, and open right up here. I'm sorry. This is where they open. They kind of pop up, right? And then they stall out, and then they sold off, and they sold off for a good, 3 days, right? In fact, if you day traded, just got in and out every single day, you had a pretty decent range. Okay, so we went from about 109, popped all the way to 117. So again, it doesn't sometimes pay to front run earnings with all the IV and things like that of that nature. So this stock has a tendency to pop then drop after earnings, especially if it's bad, and especially if you know your levels. So again, you got to know your levels where it's going to have a overhead resistance or supply, and you need to be able to act accordingly. Okay, and this was a pretty significant move, 117 all the way down to 108. That's an 11-point move. Okay, for a stock post earnings, that's very, very good. And in fact, it gave you a bunch of day trading opportunities. Now, I think this time around, the Q1 earnings are going to be a little bit more, shall I say, challenging for Williams Sonoma, and here's why. The issue is that I know that the insider selling is part of the issue things, but 2021 was not a very good year for Williams Sonoma. And look at the aggressive selling that went on. And then 2022, kind of, chugging around, right? Coming out of the pandemic and and those kind of things, it is a recovery period. Then in 2023, I mean, it just went gangbusters, right? I mean, it is at near all-time highs, and the consumer demand was high, and everyone says, hey, Williams Sonoma can't go down because it caters to high-end clients and customers. Well, I think that's not especially true, because the issue is that 70% or more of the consumers that Williams Sonoma basically caters to are middle class, or aspiring to be upper middle class, or people that want to feel like they have some leeway in their life where they could indulge in these luxuries. Now, why am I bringing this up? Because from Q3, Q4, and Q1, you see an acceleration, okay, into the insider selling. It's not as great as in 2021. However, it is still significant. And I'm going to show you why that's significant, because you got to watch what the CEOs are doing, right? Basically, on Q1 and Q2 in 2023, there was no net selling. That's why the stock went up. But starting Q3 and Q4, they were selling into the strength. The insiders were selling to you. They were selling into the strength of seemingly the stock that is a Wall Street favorite, and they're basically locking in their gains. It's the same story for Amazon, for Apple, Tesla, Netflix. They are selling right now onto the strength right now. Now, let's look at what's going on then. So, and I'm not going to spend too much time, is look who is selling. It's all when the CEO sells, and they're not selling some cheap, small amounts. The total transactions, 20,000 shares, 20,000 shares at $300, 5 million. It's the same person, right? They have two CEOs. Okay, Marta Benson is selling, but not to a degree as exuberantly as Laura Abner. Alber, sorry, not Abner. But she is selling. And, people sell for various reasons. But when you look at their total selling package, this is pretty extreme. Even Martha Benson, okay? That's significant, okay? Laura and Martha has been selling a cumulative of, in excess of $50 million of, selling. Okay. And yeah, CEOs should be able to sell. I don't have a problem with that. But when I'm trying to find out what the stock price is going to do, and whether the insiders believe that this is a good stock to hold, that it's good value to be buying, nobody's buying anything. They're selling. They're selling at the top, guys. And I will show you that on my technical analysis. So here we go. So this is Williams Sonoma Daily, and this is my daily chart that I've basically done my technical analysis lines on. Okay, and realistically, there's a couple of things that are important to note. Number one, in this chart, we have a rising wedge on the daily, right? If you basically extrapolate these lines. So we're going to have a breakdown from this rising wedge. It didn't get to the terminal end, and we basically broke down from this impulse wave. And now we're just kind of chopping around. We have an overhead resistance that by that line right there. Okay, that is the trend line. We've got, from a top-down analysis, we got the RSI that is divergent to the downside as the stock was moving higher. The volume is drying up. The MACD is about to make a death cross here, and that is something that I really look at and pay attention to. MACD histogram right here is divergent. CCI is divergent. It basically topped out. Didn't really get up to these extreme levels, but you know, how can you when you're at near the all-time highs at this point, right? This is why the insiders are selling. They know when the stock is overvalued. Okay, they will buy when it's under pressure. Okay, now the stochastic, it has said it's beginning to roll over. It's early in this stage, right? We're gonna have some significant selling. It's telling you that it's probably coming. Not 100% guaranteed. No technical analysis 100%. But when you have all of these overwhelming evidence, especially my favorite, my darling, right? PPO ADX is giving me some bearish signals, right? I mean, let's look at last time it gave us these bearish signals here and here, right? You want to see what happened? I'll roll it back up, okay? Okay, let's see. What happened to the stock? Oh my gosh. Okay. So basically, we basically sold off, right? Look at this right here. From here, we sold off. From here, we sold off, right? And so what I'm telling you right now is that we are making the same type of bearish formation, but all the divergences are in place, right? We have accumulation distribution being near the top end, and you can see that this divergence forming. You can see that the insiders are beginning to sell. We're at the early stages of this, okay? Even if it gaps down, there will be a significant range on this. And I think this is going to be pretty whippy, choppy, up and down post earnings. Okay. The other thing is, as you know from my previous videos, but if you haven't, I use ATRs very differently. Okay. Yes, I look for momentum on this, maybe get a glimpse of, you know, what the average, true range is on this. But I use this also as a not only a momentum gauge. Okay, there's a lot of, from the top, when we start to roll over, it means that direction change is coming, and that direction change already happened. This broke down from a rising wedge down, right? It's just waiting for that earnings to basically continue to move down, okay? And at down here, when it starts to move up, we're going to expect the bottom to have come in. Okay, and those are the kind of things that I teach in my courses, as well as within our membership groups. Okay, so that's basically the daily. Let's look at the weekly. Okay, very rarely do stocks show continuance from the shorter time frame to the longer time frame. What I mean by that is that there is still continuous divergence, even more strongly on the RSI on Williams Sonoma. Okay, but not only that, on these weeklies, I like to do what I call my impulse phase analysis. Okay, and it's just nothing more than my take on these trend lines, and which acts as support. But it gives you a clue as to how strong and impulsive they become. Here's phase one. Okay, they found support, started to move higher. Then they formed a phase two support, right? And with all these spaces, and then it becomes a little more impulsive, phase three, and then it goes to all four phases. At phase four is the terminal impulse phase. Okay, they usually will basically top out and then start to move down from the overhead market structure that brings you down. Now this weekly chart is waiting for the earnings, right? And here's the ADMA. Okay, if they get below that ADMA, the next logical point is basically this impulse wave 3 for potential support. Now, if they blow blow their earnings and then say yes, like most of the companies are doing, like Disney did, okay? And they're saying, yeah, just consumers just aren't buying right now. I don't know what's going on. And I'll show you some evidence of that. Consumers are not buying. Keep that in mind. I'll show you an article why I think that further corroborates that the consumers are dead. All right, so this is what we're waiting for, the breakdown to happen. Volume has diminished, okay? They had this massive volume. Guess what? The insiders are selling to you through this, okay? From all the way back from March, they've been selling on the way up, okay? So that it doesn't look like insider selling, okay? Now, CCI is basically negatively divergent. Stochastic is ready to roll over, which means that this is a longer term potential fallout if the earnings are bad. And then my favorite, again, my favorite thing is my PPO ADX. I mean, we're beginning to form these little blips, but overall, this is what it's forming. Okay, once they roll over, we already have the negative divergence. PPO and MACD are the same things. PPO is a little bit smoother in terms of their signal. So what's happening with the accumulation distribution? We're at the top. We're negatively diverging. It means these are all signs that the insiders are selling. When did this start diverging? If you don't believe me, let's look at where they started diverging. Oh my gosh, starting in March. And that you can see that acceleration of the insider selling, right? And then ATR, look at that. This is at the top end and it's beginning to roll over, right? We're beginning to maybe do this and then start moving down. This is telling you whatever the trend, primary trend, which is up, is beginning to crack and come down. And we have a lot of meat on this bone until we get down to these levels and then it moves back up. We will not know. We will know then that the bottom is in, okay? I wanted to share with you this article that's happening right here. And, this is, I know, it's just one article, but guess what? You know what? Williams Sonoma always has that Memorial Day sale. Well, they've extended that Memorial Day sale early, okay? And so they're saying Williams Sonoma sales section is so good right now, we're not even waiting for Memorial Day. The reason for that is their sales is going to suck, okay? And when you do the channel check, if you don't believe me, do just an eyeball test, okay? How many Williams Sonoma stores have closed down in your mall? And how many Williams Sonoma stores, they used to be in every single mall, are in your mall, in your area, okay? Just saying. Let's do a quick analysis on the options chain. This is for June 21st, 2024 options chain, okay? Because they don't have weeklies, okay? They're expecting about a 37.4 point move into the expiration. The open interest as well as the IV percentage is about 50.09. It is slightly elevated. Okay. What you want to look at though is the open interest. Okay. I have basically the volume which is non-existent so far, even on the put side, right? What you got to look at is the open interest. Okay. Look at this. They're all in the hundreds, 200s, 100s, right? Versus right here, it's near the money is 1521. Someone thinks this is going to sell off. They're in the 260, 566, 573. I mean, these are significant numbers. Now, it's not going to always correlate, but it always does rhyme, right? Someone thinks, even though the analysts are bullish, these analysts are always bullish at the top and bearish at the bottom, right? The stock is at the top. Insiders are telling you, though, they think that it's overpriced. Or they think there's some other market dislocation coming. Don't even get me started on this, okay? So open interest is overwhelmingly, I can't talk in favor of the puts. However, the stock is near all-time highs with near the strike open interest at 1521. Puts versus 35 calls, okay? That is called a skew, guys. It is something that I would basically say, hey, look, there's something that's going to happen. And when the insiders selling, especially the CEOs are selling, okay? Can you imagine the lower level employees? They're probably selling too. So, having said all that, WSM is a specialty retailer and that is dependent on consumer discretionary income, okay? Even the rich people are tightening up because they're, maybe their portfolios aren't working or basically their income stream is also being reduced. And because of the rising interest rate, their investment opportunities are reduced. So Williams-Sonoma has responded favorably to the last earnings, except for Q1. That is their seasonally weak quarter that they're coming into right now. Okay? A big beat, an EPS will absorb any continued misses in the revenues estimate. However, a marginal beat on EPS will send the stock selling off either pre-market. I've not seen Williams-Sonoma sell off since 2021, like literally gap down. So maybe it's due. Okay. But, I'm not advocating front running the earnings. But what I do say is that, give this a consideration. See if this analysis makes sense to you. There are significant insider selling. I mean, these aren't, program selling. These are people dumping, the CEOs dumping their shares. Okay. And they're selling to you as the stock was rising. They never ever sell at the bottom. They're busy buying, guys. Think about that. Put open interest as statistically significant. So we talked about that. There is divergences in virtually every single time frame, daily to weekly. Okay, even on smaller time frames, and on all the major things, indicators: RSI, MACD, CCI, PPO, ADX, ATR. Okay, accumulation distribution. They are all uniformly pointing to you that while it's at the top, it is diverging. It is telling you something. And there is on the weekly chart phase 4 impulse failure, and it is stalling, right? It's waiting for something to happen. Maybe it's something happening globally. Maybe it's just maybe that maybe consumers aren't buying anymore. Okay. When they could go to Target and buy the same looking pots and pans for $50 instead of $500. Okay. So ATR is breaking down from the top of the range near 16.847. This stock, however, has a history of popping and stalling if it's going to drop, or it just basically just goes, right? And so unless you have a lot of clams or money to throw at this, I don't advocate putting a lot of huge position in front running because it's a gamble, folks. Okay. But if you do have some, I think if you're going to gamble and you're a gambler and not financial advice, okay, I think things are aligned where this thing could sell off significantly. That's why I'm making this video, folks. Okay. There is heavy insider selling that is higher than historical norm, and we have a very tradable range. And if you want to find out more about that tradable range, email me. Okay, consumer demand destruction thesis is alive and well, and Williams-Sonoma belongs to this. Okay, so thank you so much for listening. Like us, share us, and above all, comment, good and bad. Okay, and make sure you go to our Twitter or x.com at Galaxydoc Market. Okay, and find out. And also, please subscribe and give us some thumbs up. I put a lot of effort into this, and hopefully this helped. Okay, if you want to inquire about how to work with me, email me right here, Coach Brandon at protonmail.com, and schedule a consultation. Otherwise, let's get some alpha.